Hello, welcome back, and let's talk about the Bollinger Bands and how to use the Bollinger Bands in your trading and what the different signals can be. So the Bollinger Bands, let me first show you the settings that I use. I use the regular 20, so the moving average in the middle is a 20 period moving average, but I use a 2.5 standard deviations instead of the default, which is 2. And what this means is that it will just make your Bollinger Bands a little bit wider, so they capture more the extreme price movements which we want. We want to filter out the noise a little bit. So that is what you see here. And there are many different ways how you can use the Bollinger Bands. What I like to do and what's the best, in my opinion, or one of the best applications, is to use them to stay in trades and also to use them to understand when is the market likely going to reverse. So here are a few good examples. So the market, let me show and map it out for you. The market was here in a double top. You can see when we zoom out, it was in a very decent trend. Then here, this is then a failed or a fake breakout, depending on whatever you want to call this. And then the market started its downtrend after. We broke a few important support and resistance levels on the way down. Okay, so here we go. And then the market was in a downtrend. A downtrend on the Bollinger Bands is characterized when the market is so-called riding the Bollinger Band. So if the market can stay close to the outer Bollinger Band and not come very close to the middle band, then it shows you a very, very strong trending phase. Whenever you can see that after, maybe here we can see a very nice breakout, actually decent support level, then it breaks below that, or the price breaks below that, and you can see here the market then rides the Bollinger Bands. Very, very strong signal. And then here at the bottom you can see the market pulls away. It doesn't quite reach the opposite, and I would say that if the market makes a complete Bollinger Band shift, where it goes from the lower band to the upper band, then it is clearly a reversal signal. In this case, if it doesn't reach the complete opposite, it's not that strong of a reversal signal. But what happens afterwards is very interesting. It does, or the price does, make another lower low. But if you know anything about momentum and indicators, what does this tell you? It tells you the first price wave was very, very strong. Then we have a little consolidation, and this trend wave is obviously much, much shorter. So if you put on any momentum indicator, an RSI, a MACD, whatever, it will show you a divergence. This is just how divergences will look like. And we can do that whatever indicator we want to throw on. It doesn't really matter. It will always show you the same. So let's, for example, just try the RSI. And then we can also do the MACD. You can also put on a stochastic. You will always get a divergence now, because this is what divergences are. And if you know indicators, then you will be able to read them even without having them on your charts. So you can clearly see, okay, the RSI, clear divergence, the price made lower lows, indicator showed you a higher low. The MACD, here you can see this is the MACD that resulted in this trend, and then you can see from here to here the second trend wave, obviously much weaker, and again we have a divergence here, and also we have a divergence here on the MACD lines. So you can, if you pay a little bit of attention to momentum and to trends, then you can find divergences on your own. And what this tells you is that clearly the market is losing strength. And then shortly after we have the divergence. You can see here the market suddenly reaches the outer Bollinger Bands, and then we start a new uptrend. Granted, it's not the most or the strongest uptrend you will ever see in your life, but this is clearly all pointing towards a shift in market structure and how the market moves. So this is how you could use the Bollinger Bands in this example to just come up with a very, very thorough price analysis. Here's another very interesting example on gold. I call myself a pattern trader. Whatever you what you associate with that. So here we do have a nice pattern with a channel or whatever, a wedge, however you want to call that. And then you can see we have a breakout here. So breakouts, and if you read the old market wizards, they are almost all exclusively, and there's a nice price alert, almost exclusively they call themselves trend traders, but they will also say that every trend starts with a breakout. So if you want to become a trend trader, really start paying attention to learning breakouts. And here we have a breakout, very nice. And then you can see you can use the Bollinger Band to stay in the trade. Here we have a retest and a pullback to the middle band, which is the 20 SMA. If you are in, or if you didn't catch the first breakout, maybe you were asleep, you were scared or whatever, you can use the middle band to time your pullbacks. That is also a very valid strategy. What you don't want to see is that the market completely reaches the opposite side. This would be a very strong signal that the market is not really that bullish. But in this case, we retest the moving average in the center, and the market continues its way higher on the outer bands. Then here we have a little bit of a longer consolidation, but at no time the price reaches the opposite side of the Bollinger Bands. And then again, we can probably, no, not too much. But then once the market pulls away, so there are a few ways how you could have gotten into this. This is not the cleanest chart, but I just chose this randomly. So you can see classic breakouts would be when the market makes a higher high here, or when the market makes a higher high here. At this point, we also have this nice triangle-ish pattern, not the most beautiful pattern, but yeah, textbook pattern trading is pretty overrated anyway. The market is not going to behave like your textbook, so try to learn and to cope with these imperfect patterns. And then you can see the market again continues its way higher. That was the wrong thing. Without ever touching the opposite side. And then again another reaction or another move to the side. And then at this point we have a double top, which then this time it held. The market was not able to make a breakout to the upside, and what followed is also that now the market is reaching the opposite side of the Bollinger Bands. So this is clearly now showing us or giving us a lot of warning signals. If you are long, this might be the time to think about exiting your trade maybe. And this will also give you a divergence. Why? And this was not supposed to be a divergence video, but I think it's a nice learning opportunity. Very strong uptrend, very weak. Well, you cannot even call it an uptrend, but the last push, the last attempt before the bulls throw in the towel. So should we do it again? So we used the RSI and the MACD before. Let's put in the stochastic, and this should give you a divergence as well. This is all raw, and yeah, so you can see here was the point from this high, and then you can see here we clearly make a higher high, lower high, whereas the price makes a higher high. So the indicator tells us, well, if you look deep inside the candlestick and the wave structure, this will show you that the momentum is fading and that the last leg here, the last uptrend, is not as strong as what we've seen here previously. And then we can put it all together, and you can see how valuable the Bollinger Bands are, how valuable in general indicators are once you understand how to use them, what they really show you, and what the different applications are. So don't become one of those traders who just says indicators don't work, price is the king. This is not true. Indicators are price. If you know how to use them, then good for you. If you don't know how to use them, don't go around and start blaming indicators just because you don't understand them. I hope you enjoyed this video. Let me know in the comments below what you want to see next, what you want to learn next about, and I'll be happy to help out.